How's it going, everyone? This is the 113 to 117. Is that right? 17. 117 weekly trade review. Do not know what the date is. So, I'm going to go over all my picks that I took this week. And let's start with the swing trades. So, I had 3 swing trades this week. The first of which was Adobe. And I'm going to pull up the SPY D1 over here. And just to lay out, I have TradingView over here in case I have some other stuff marked up on here. So I'm just going to keep that in the corner. May not be as relevant right now. There's some stuff over there. All right, so Adobe right here. I took it on January 7th. We had this little break of compression. Through some horizontal D1 resistance, tested that, and then we broke through to this nice little low. I got it at 425, so pretty close to VWAP if I remember correctly. Let me check that. Not close to, well, it was close to VWAP, but I got it on this little pop over here. And then we had some nice follow through. On 1.7, yeah, so we had it test, and then we were starting to sell off over here. So it was a nice entry point in both the stock and the market. My target on this trade was about 400 with some psychological support. So maybe something like 401 or 402. So that was my target. And then we had a nice week of selling here in SPY. And then on the 13th, we had a gap down and a kind of a grind up over here. It wasn't a super long bullish candle. It wasn't even a bullish engulf, but kind of a nice sign the short-term low was in. We were by the 100 SMA. We had filled in the gap as well, so there was some gap support right here. And we had this AVWAP, not quite tested yet, but from all the way from 8.5 coming into play. So a couple levels here, and we made a nice move. We're also in this bearish channel, so bottom of the channel, take gains. So I took profits on the 13th right here, which ended up being a great exit. And I think the major clue on this chart, if I look back on the M5 chart over here, let's scroll back on this guy. All right, so we got this gap down, and then we had a little bit of selling pressure. If I looked at SPY on the next day, SPY had a gap down, and Adobe did not gap down. So that was kind of the first warning sign I had. We're seeing a little bit of buying here. We also couldn't, I did have a small gap down here, but then it immediately filled in the gap, and it held this level around 405. So there was some support coming in around 405. I think I ended up taking the gains somewhere here. So pretty happy with the gain at 409. I think it was the right decision to take the gain. Small optimization. Maybe it could have gotten out closer to VWAP. Maybe, but that's like not really like a big concern of mine. So I think overall pretty nice trade. Good pick. Got the stock right. Got the market right. And continued on in that direction. All right, next pick I had for this week was Geo. So I took Geo on 110. So let me go to Geo. Right, so I took Geo, on January 10th. And let's look at this over here. So first of all, super strong D1 chart, big breakout, super long compression. Broke through that compression on a very clean break on the 8th. 9th, we had a doji, so a little doji sandwich setting up. Now, SPY made a pretty big move for the week. It was close to some support. I felt that in a bearish channel. We also have this downward sloping trend line coming into play over here, so close to that support, and thought there was a pretty decent chance that market's going to rally next week. So took Geo long here. I took 80 shares initially, so about a half size in this position, and I had my support right here at about 29.30-ish. We see this is the top of that resistance, so we tested that resistance on the 13th, which is totally fine, right? That's a very normal test of resistance, 8 EMA as well. And then we started to rally off. So once I got this test of support that held, I actually added another 20 shares to the position at 30.65 so at 30.65. So pretty much had a little bit more, maybe like a 2/3 size position on this, averaging at 30.80. And if you look at the monthly chart, Geo has a all-time high right over here at 34.32, as well as some resistance kind of like at the 33-ish level. So my target was, I think, 32.90, just right below the 33-ish level. Maybe we test it. I'm not sure. I don't know how strong this market tailwind's going to be. Don't feel like overshooting this channel, right? I mean, overshooting that all-time high. I'm not banking on that. So it's looking good. We got a gap up on CPI on the 15th. And I took profits pre-market at 33.40 on the CPI gap up. So 50 cents better than my target. Took a really nice win on this trade. Stock is still going, and I'm cool with that. I didn't need to press it. After the CPI gap up, we're still in a bearish channel. There was a chance that this big gap up could have filled or even poked to the downside. Maybe not as likely because the move is a little fresh, but there's a little bit of TA in the way. And let me maybe hide some of these drawings right now. Maybe that's just a bit of a cleaner look on the chart. So, pretty nice trade in Geo. Nothing I'd really change about it. You could say, yeah, you could have stuck with it, but market's not high probability enough to stick with that kind of trade. And also on a gap up near the all-time high here with market tailwind is questionable. It's okay at best. Right? What are the chances it breaks through? To me, not super high. Last swing I took is IONQ. I took this trade on the 15th, and this was actually a out-of-the-money CDS. I took the January 24th 41.45 CDS for $1.25, so a little bit less than half-sized here. Half-size would be $1.50. And market was testing that 50 SMA, and it held that test, or tested right over here. I thought, all right, I mean, there's a chance it held the gap. We have a chance to actually poke above this 50 SMA, and I can make a little bit of a move higher. So the next day, stock is small gap down. You can see that INOQ gaps down and actually managed to rally up into the gap. I'm like, all right, little test. That's good. It is a little choppy. We have a clear path in here. Next day, market gaps up. Stock actually gaps down, tries to get back over here and fails. So ended up scratching out of the trade for like a $2 win. Nothing crazy. And I'm just going to show the chart over here. So here is INOQ, gap up, nice move over here, comes back, tests it. All right, this is cool, right? Then we spend the whole day grinding up higher like this. And then here, gap up, right? And then SPY is going up higher and compressing. You can see INOQ not really going up higher. Challenges this level again and starts to sell off. Holds this level. And then I actually take after I see this, I try to scratch out at VWAP. On that right over here. So, yeah, pretty happy with that on INOQ. And I think I entered somewhere here and I scratched out somewhere here. So fine with that. And that's pretty much the swings for the week. So 3 swings this week. And I guess technically all 3 were wins, although INOQ was kind of a scratch. All right. So now I'm going to go through the day trades. Now I took 15 day trades this week. So took a lot more day trades. This is also a lot more than I usually take. So there's going to be definitely some room for improvement here. First one I took were had some SPY day trades this week. So I took a SPY long, and let's start on the 13th over here. I need to put up these indicators here. Okay. So I took a SPY long right here. 25 shares at 577.57. So I got in right around here. And what I liked was that, all right, we filled in the gap. We're making some higher lows over here. We made a nice bounce off VWAP. We had a nice move over here, and then it compressed, and then we got a pop up. So I like that move here. Then it got immediately pushed down, and my stop was actually this low right over here. So when I got this red candle here, I actually ended up stopping out of the trade. And then, or actually, I mean, I don't think I didn't stop out. I took the loss, but that was my technical stop over here. Took the loss, and then ended up rallying up higher. So this is one of the trades I feel like when you're first trading, it really just messes with your mind because you're like, oh man, I thought I had it and it didn't go. I think the mistake that I should have done is that given the choppy price action, just sized it closer, maybe to a break at the low of the day. And know that, all right, there's some buyers here at the low of the day. If that fails, then you get out of the trade. So size it for a move to the low of the day, and then add a chance to ride that up higher. Also, really would have worked out way better as a swing trade. When you see this buying here, fills in the gap. This is a strong close here. You have a chance to probably swing that into the top of the channel. So I think this really should have been a swing trade in my opinion. But that was the loss on SPY. Let's go to January 14th here. I took SIG short. And luckily my day trades are pretty small size, so they didn't they didn't do a whole lot. So that's where the sizing comes in pretty well. So I think I took SIG short pretty much, let's see. Yep, pretty much right here. So and this poke through here ended up being a bit of a hammer on the 14th. If I look at SPY at that time, probably shouldn't have zoomed out so far in SPY. Yep, here's SPY. So I managed to snipe both at the low of the day. Now, here's the setup that I liked. So SPY had a gap fill, it had some good selling on some volume. Now it was a little bit choppy, but I like this move lower. And so far, this bullish cycle was not producing. If you see this bullish cycle here, so I was like, all right. I mean, cool, this little test. As long as it can kind of grind through lower, this bearish cycle should start producing. Then we got a pretty powerful bearish divergence over here. Very steady selling, defending this level from the gap. You can see I drew this upward sloping trend line from the prior day, and that ended up kind of holding. So that was my bias going into the trade. On SIG, it had a really big move down lower, and what I really liked was that after this move, it had a really nice orderly selling. Didn't feel like it was too extended. Ended up bottoming up over here. There was a little bit of TA, but I wasn't super worried about the TA when I took the trade. It was like a low minus trend line or something. I felt the stock had the volume and the market had a tailwind to kind of crack through it. But just in case, I sized for a move towards VWAP. And guess what happened? We got the move towards VWAP. It was compressing. And then when SPY sold off later in the day, 250, 255, 3 o'clock, you can see that the stock did not budge. And that's when I took the loss on the trade. So I think took like a $45 loss-ish on something, which was pretty much about my max loss. I sized it for a max loss of $50. So is a max loss. I think probably the one, if I go back and do the trade, it's not the worst trade, but it's also not my usual setup because I typically don't love to chase these stocks. I love to get in on a little bit of a bounce and then the move. If we're looking at SIG, something like here, right at 1055 would have been the better entry. Or you're waiting for this move to VWAP and then for this to break down. And when it doesn't break down, then there is no trade. So I think really the clue was actually just to not take the trade in the first place. That'd be the one thing that I'd say. We also had a pretty big gap down, so I knew that on a gap and go, right, the chance of a little bit of reversal risk is high. There's going to be some profit taking, and you can see how the stock is still doing well. It probably works a little better as a swing trade, but it's been digesting the gains. There's probably a better move when you get a buy signal than wait for it to flip to a sell signal. See this upward sloping trend line breached, sell signal on a weak stock, and you can day trade that guy. Maybe to the bottom of the prior day range, but inside day, so I don't know about that. So that was SIG. Conclusion, that's a trade that I just shouldn't have taken. But because I sized right, it didn't end up biting me over. Next one I took was SPY on the 14th. I did a day trade short, 12 shares at 579.15. So pretty much right around here. It started to break down through this low. I liked what I saw in the market. Gap fill continuation, 1 OP bearish divergence, and a pending 1 OP bear cross. We also had a bearish channel coming in on the over here, so I shorted near the top of that bearish channel. And my plan was to take gains in the bottom of the channel, so I was looking for maybe like $2. And then if we drop hard and fast, I'd take the gains into strength. And then if we drop lower, then I'd probably ride at the position if it's more of a gradual kind of slope down. And I did size for a big move through VWAP, which would be like a $50 loss. Got the big move through VWAP, so we got this double bottom here, poke low, couldn't get much going through there. Now the bearish cross was still fresh, so I decided to hold on. We also had this 100 SMA to lean on, this horizontal resistance as well as the SMA 100 to lean on, and VWAP, so that was coming into play. Now we got that higher high, and I was also leading on this level right here, this high at 1125. I didn't want to see it breach this level, and I knew a tall bounce to the level. It could still mean a move back down later. So market rallied, and then I think I ended up taking the loss at 583.20. So pretty close to this high, and then you could see it drop down here, and then 579.17. You can just see how I'm getting just kind of smacked around here by SPY, where I got long, puked out, and then it rallied. I got short, puked out, and then it dropped. So the intraday conditions are choppy. It's tough to trade. And again, I think this is one where I should have just not traded, right? I had a plan. I stuck to the plan, and I followed the plan. So I did a great job of following my plan. But the plan should have just been, don't trade on a day like this, or wait for a bounce. Wait for a bounce. It can be tricky to know when to get out, especially when you see the strong price action. It's rising R vol in consecutive candles. Now, there was some selling pressure here, but I didn't think we'd get a kind of a deeper drop later in the day. So that's what it was. So that should have been a no trade. And here's what I wrote, actually. I think this is important to say. So I keep telling myself I want day trade SPY, but it's alluring because I want to master it. And I need to reread Pete's articles and pare down my trading. And I'm bleeding away money on these program days. I got to somehow drill in my head that we only want to trade these orderly, heavy volume price action days. We might get like 4 a month. So the first thing is recognizing when not to trade. I think the better setup was, I think going long here was actually probably a pretty decent trade and sticking with it to the end of the day because we have a gap fill reversal at the bottom of the range. But this price action is choppy. The better trade is probably not taking many trades this week. Honestly, there wasn't a lot of convincing price action. The best setups that didn't materialize were a gap reversal on the 15th, potential gap reversal on the 17th, which didn't happen. And we'll see if we get a gap reversal tomorrow. We're at the top of the bearish channel, so we're gonna have we might have a pretty nice opportunity to short because that's when those D1 sellers are going to be coming back. Okay. Took another trade on the 14th. I went long 1 share here just to get my confidence back, I think. So I pivoted, and then I think I took 1 share long at 209 at 583.58. So pretty much right around here. Again, went long at the high, missed the move, and then scratched out of the trade, which I was fine with. Cool with scratching out. I think that was a smart exit, but really, again, this should have been a no trade. So already you can see that out of the 4 trades that I've already taken, I shouldn't have made 3 of them. All right. Let's go to the 15th where I traded SMTC. So SMTC, super tight break of compression on the 15th. SPY on the 15th. Where is our beautiful friend on this CPI gap up? Here he is. So gap up, moved up higher. We're watching for this gap fill reversal. So I'm going to zoom in on SMTC here. And I took a day trade long. Oops. Let's go over here. Right here. Okay, so I took a day trade long right here at 10.25. It made a new high of the day. So I took 25 shares day trade long at the 71.50. The 71.50 on this 10.20 candle. And my stop was this kind of prior low right here. And I was looking for maybe like a $1 move in this stock at 10.25. You can see here, here's SPY at 10.25. We're starting to move up higher, holding the gap. Now, honestly, I should have also not taken this trade. I ended up taking a small loss on this. And I exited this trade at 10.56 at 70.88. So I exited pretty much right here. So I took a tiny loss on this guy. And it was really because I just didn't have like any sort of bearings on this. I thought the SPY could reach the 50 SMA. We started to sell off, and then we started to hold VWAP over here as well. I listed out a couple of different scenarios, but I never really got a convincing close below this level. You can see we tested it. We never broke through VWAP, which was my stop. We never closed hard into it, so that's when I would have taken the L. We held it, and then we rallied up higher. So I just really wasn't prepared to take the heat on this guy. And you can see that broke through, and even when the market was moving down lower, right, 1130, here's the 1130 bar, and where's the 1130 bar? Here's the 1130 bar on SMTC. Held it, rallied up higher, and then you could see these mixed candles kind of chopping around. So here's when you want to take some gains in the stock. Right, pull back. Can I break through the high? That's right, some tiny body candles. Probably not going to break through the high. Get out over here. So my entry was honestly, like, stock-wise, my entry was not bad. Market-wise, I think my entry wasn't great, to be honest. I think it could be a little bit better. The better entry would have been to wait later. I think at 12:30 when we got this test of support, right? This gap held. Started to get above VWAP here. Tested VWAP again. Got a fresh buy signal. So over here, I think you could probably try some longs at 12:30. But then at 12:30, it was showing relative weakness. The move had already passed. So it was pretty much just out of sync with the market at that point. So I think this should have been a no trade, even though holding it would have been more profitable. You can see that even if it held to the rest of the day, I would have made money. So I knew that entering early and this, so you can see a strong move up higher, held most of the gains, and then it rallied up again. I knew that, I thought it was pretty good chance of going higher, but I didn't have the market confidence on my side. So I think this should have also been a no trade. So I think so far the only trade I could have justified taking was the first SPY trade. I think there was justification there. Next day trade, ISRG on the 15th. So market gap up, stock is shooting up higher, comes back over here, finds some support. So I entered ISRG at 11.15. So I think this was a bit of a better entry. So I entered right over here. So you can see that we're holding VWAP during the bearish cycle. We're holding a ton of these gains, and I've let some of this move pass. I also know that the bottom of SPY is going to be my stop over here. So now if I look at ISRG, a couple of things here. First, it's a smaller gap up, and it's moving up, shooting up really high. I got to start with the D1 context too. breaking out of this compression with a ton of momentum, right? Ton of volume coming into this guy. So we have some nice consecutive green candles. There's a little bit of overlap, but there's not too much overlap into the prior body. We get this over here, and I'm like, all right, so I'm going to wait for a dip to VWAP over here. So it comes back down, is dipping to VWAP, and then I set this alert line right over here, and I enter, let's see, I enter at the 11 at 11:25. So at the close of this candle, I took 7 shares at 572.39. So took it pretty much right about here. Okay, so my stop is very close to VWAP. Breakthrough, I'm out of the trade. If SPY breaks through, I'm out of the trade. So I like what I'm seeing here. Now, this stock kind of compresses for a little bit, and now it starts to poke out of this trade. And I believe I added to this trade. Or I tried to add to the trade when it started to break out over here, but actually didn't get filled on the ad, so I ended up not adding to it. But I tried to add at 574, and it didn't get the fill at 574, unfortunately. So, but I was writing the trade, and then let's see what I did. I took gains at 12.22, which was right around here. So we had this bearish hammer, not a huge tail, but we are close to the all-time high. So took gains of this bearish hammer, and then if we go here in SPY, right over here. So we had so we had tested. This was the setup that I saw. So we had tested the low of the day, come back here, and we were kind of bouncing off VWAP a little bit. So I'm like, all right, look, I made the move to the high of the day. If the market starts to roll over here, maybe I'll scratch out of the trade, but I felt that I was a little bit more bearish on the market, which is why I took gains on this trade. But it took a really $5 of profit on this guy. So took a nice win on ISRG. And I really wish I could have added like an extra, I don't know, 10 or 15% on this guy. But is what it is. Now, I ended up being wrong about the market and a little bit wrong. So the market rallied up higher, but the stock was actually doing pretty well. You can see that after it made a new all-time high, test, breakout over here, some tiny body candles, some higher volume coming in here. So I would have scratched probably when I saw these tiny body candles, especially around 2:15-ish, right? Market stalling. So it would take some gains over there, and then looks like it ended up rallying a little bit higher, but that would have got a really nice chunk of gains. So definitely had another, looks like $4 in this move, maybe $4 or $5 in this move. Had I got the market right and the stock right, but I think there's a kind of a risk reward that goes into it where I have to be willing to scratch out of my trade over here if I was wrong about the market. So if I was wrong, I would scratch out, but if I was right, I had a chance to get bigger profits. But if I closed right now, I could get pretty decent profits. So I'm always kind of balancing out, and there's not really a hard answer to that kind of question. I think that it just is very contextual. Depends on the market. And in this sort of event, right, over here, we're kind of at a decision point, and we ended up rallying above VWAP and then moved up higher. And at that point, I didn't have a great entry, so it didn't make any sense to enter the trade. But if you're in the trade, you could still probably stay in it. So ISRG was a good trade. Proud of that trade. All right, next one I took was RSP short, which is it was sort of a relative weakness trade. Let me get into what I saw. All right, so SPY gapped up, RSP gapped up, and then SPY, you can see RSP was compressing and then selling off while as soon as SPY started to move up lower, and it broke through its low of the day pretty quickly. So RSP was quite bearish. It also had rejected its 100 SMA right here, while SPY was above it. So a much more bearish daily chart, and I thought it had some nice room to the gap. So I did a day trade short on this, and I I took 50 shares short at 177.40, so somewhere around here. And then you can see that I got the market wrong. And with RSP, you don't get as much relative. You get relative weakness, but there's still correlation with the market. So market rally to an all-time high. You can see it kind of stalled around VWAP over here. So I knew that this was going to be an L. I was just waiting for a rejection off VWAP, and then we finally got a little bit of sell-off, and I took the loss at 177.80 at the end of the day. So 40-cent loss, 50 shares, so $20 loss on this guy. Not a huge loss, but again, this is just a trade I have taken because it was moving up higher, and when I took the trade right here at 11:30, yeah, or sorry, the next trade over here, I was expecting the market to kind of break down lower, and then we didn't get that breakdown over here. So I know what I was seeing it over here, but the problem was that I just didn't have a great entry on this guy. So I had to be a little bit more willing to scratch out of the trade if I didn't get a great entry, and maybe re-enter if this candle kind of had some follow through. But just kind of tough on these gap up days over here. This was looking nice over here, and then we started to retrace into this body and held and move up higher, which is not really what we wanted to see. So I think, again, this should have been a no trade. There were probably better relative weakness stocks to trade. All right, and then I have SMTC again on the 15th. And I took this trade at 125. So I went long 20 shares at 73.43. And here was a setup that I liked here. Move down, we got a breakout over here. Come back in here. We preserve the halfway of this candle, most of this move, break this downward sloping trend line. Nice long key green bar, closing above the 8 EMA, closing near its high. Really like that price action. Now, it wasn't super strong to the market. So could be a little more of a market tailwind if I see the time of this candle, 125. Look at the time of this candle here, 125. I was bullish on, whoops, that's the wrong day. Excuse me. Oh, no, that's the right day. I apologize. Here's 125. So rally up a little bit higher. You see this is a pretty weak rally. Tiny body candles, mixed overlapping, pops up, immediately challenged, right? So not going a whole lot there. This stock, bearish hammer. All right, don't like that, but it's still early in the trade. Holds. This is actually, if you have a 10-minute chart, this makes a doji. Moved up a little bit higher, and I was targeting maybe like $1, right? I was like, look, it's made a big move. It's made another leg. There might be one more leg in this higher that I can take gains on. Now, SPY ended up being pretty close to 50 SMA. Price action is not looking great. SMTC was also stalling near the high. I wasn't able to break out even though the market was moving higher, so I didn't really like that. And I ended up closing this trade at the close of this candle. I scratched out of this trade at the close of this candle because this is not the price action I want to see attacking this high. I wanted to see, right, move up here and then bam, right, we just blow through that high. That's a really nice break. I'm not getting that break over here. I'm seeing some resistance. We got a little bit of a poke, but not the relative strength I wanted to see. So this move is getting kind of weak, right? Buyers are coming in here, here, here. So I'm out of this trade. So I think this was a fine trade. Fine trade and good scratch. I don't have too many problems with that trade. I think I had a good plan. I was trading with the market tailwind, and I saw some warning signs, and I got out of the trade. So there's that, and ended up being a pretty good decision. Go to SPY on 116. We have a small gap up to a high. Instantly gets faded. Inside day, chop around, compress. Choppy action, low volume. Not trading anything in SPY. And this is just a pretty garbage day. Now, actually, I don't mind the garbage days too much because it means that I can probably find some least some picks that are moving in some direction in some way. So I took AMAT long on the 16th. And I took day trade long, right over here at 12:25. So this is what I saw. So gap up, compress, test, and then we start to break out this compression here. We move to the high, quick check, and then nice surge higher. Testing the gains, testing the gains, testing the gains. I like what I saw on AMAT. Now market, let's see, this is 12:25. Yep, 12:25. So it's pretty flat. Not doing a whole lot in the stock. And my stop is probably somewhere here. But we have this breakout over here. I think I got on an AMAT right here at 11:55 when this stock, market had popped down a little bit here, was holding the gains. Stock started to rally up and market got above VWAP, 11:55. I was in the trade. I liked what I saw over here, and I like how it held most of the gains. There was a little bit of fighting over here. So entered, and then boom, I saw this red candle. All right, not the end of the world. Follow through candle. Okay, I don't like that. I'm going to get out of the trade. So actually ended up being a pretty short trade. I actually forgot, sorry. I took here, I added here, so my average size was somewhere here. And then stock ended up going against me and pushed down lower. So I took gains pretty much right here at 190.20. So averaged is probably about $1 loss on this guy on 40 shares. So took about a $40 loss on this guy right over here. I like the setup on the stock. This is a pretty nice setup. Big gap and go, but get big gap, compress, and then go. But it looks like it just said this was kind of the move over here that you could trade, and missed that move. Now market was pretty flat, so this is pretty much all a stock thing. And smart decision. Now if I held it overnight, I probably could have scratched it out, or maybe taken a small win on it. But I'm not in the business of holding day trades overnight unless I very, very, very rarely do I do that. So I thought this was a good trade. It was a good setup, and it had a smart exit on it. So it was a loss, but I like how I did it. Now mentally though, this trade did mess me up a little bit. And here's what I wrote. I want to share what I wrote because I think it's important. So improvements, I said no trade given that the 50 SMA was higher. Mentally, I've lost all confidence in my day trades this week. I need to go back and analyze to see where I've messed up. I'm kind of pissed at myself. I'm not going to trade anymore today because this is the LPT environment, super tight ranges, and I am not in the right mindset. I need to let a few stocks, a few good picks pass me by and get everything perfect. Market, stock, and most importantly, the entry. So I noticed that if I lose, a few trades in a row, that is not me trading at my best. And that means I need to take a step back and need to take a lot of trades past me by. So when I saw this, I was like, you know what? This wasn't even a bad trade as I look back at it. But mentally, I needed to reset. I needed to regain that confidence back. Okay, so now let's go to the 17th. Okay, so 17th, we get a gap up. I'm watching for a reversal here. First, we get a long red candle. Nothing really. So this is nice. This second candle is nice. I don't love this third candle with this doji. And then we start to rally up. Not a fan of that, but needs to get smacked down. This candle is decent. This candle, okay. And then by the time I got here, I'm like, all right, we're not going to the gap. Right? This is getting a little bit too bullish. Usually the moves down is a little bit poke higher and then we move lower, or we have a blam, blam, blam. We get some long red candles and then some choppy follow through. We also could get some consecutive selling into the gap. So this is to me looking fairly bullish. And then we're compressing near the gap. We find a little bit of a tail, and then we start to rally. Tail, new high of the day. Big volume here. New buy signal. So this is the time to enter longs. I took RCL right here at 10:35, and ended up actually ended up marking that chart. So maybe I should just bring up that chart on the side here. Where the hell is this? Yeah. Maybe this will be a little more informative. So it took RCL long. You can pause the video if you want to just look at this chart. Blue is the bullish cycles on SPY and the stock. Yellow is the bearish cycles or the contra cycles. I like to think of it as like 4 cycles and contra cycles. So the trend is bullish, so the gap is in favor of the trend. And then this is the contra cycle. So here's kind of the setup and clues. Here's why I took the trade. And then I actually ended up taking, it moved up higher. And you can see that after this breakout over here on this trade, we got a little bit of follow through and then a bit of a tail, not the end of the world. And then it compressed while the market started to rally. So I didn't like that. I wanted to see some better follow through. And I was like, all right, well, gap, a lot of the gains are realized. We are close to psychological support at 600, as well as the prior high from 1.6, which is 599.70. I'm not going to go gonzo with longs here. So I was over here. I had gains. So I wanted to actually set an alert over here at 243.50. Got a high of 243.48. So missed my order by 2 cents and ended up taking profits at 243.10. So took about $1 on that. So RCL was pretty textbook trade. This is a strong stock compressed for a little bit, which is what I wanted. We had a contra cycle, and then I joined the bullish cycle early, and then it didn't end up manifesting as much. So here would have been my stop, and then I probably could have been stopped out somewhere right here on a close below that level, and taken a tiny loss on the trade if I needed to. But took a nice win and ended up being the right play for the day. So pretty happy with RCL. Next one that I took was Futu as a long. So same deal. Took this at 1040. Move is still pretty early, pretty fresh. You can see, first of all, there was something going on in China. There's some news. Has a pop, so it's day tradable. Not going to swing it. You could probably do a strangle if you wanted to, or a straddle. Broke through the double SMAs and the AVWAP. Hit, by the way, is this on the chart? No, let me put it up here. This is important. So yes, so this AVWAP right here, you can see that from this close, pretty much hit the top. Oh, actually, sorry, hit this AVWAP right here from 11.7. Right, you can see that's providing some level of resistance. So at the top of that, so I knew that there was some D1 resistance overhead, but this is a pretty strong move. And I dropped an alert line just like this. And let me actually just pull up this chart. Yep, so strong move here. Small gap up, and see these orderly green candles on heavy volume. Not a lot of retracement. All right, strong move. Pull back over here. Now, this is a little choppy. You see this overlap. Buyers, 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 buyers. Found some support at VWAP. And then at 87 bucks. We had immediate follow through. So I added at 87.64 and at an average price of 87.32. And then I took 5 shares here. I took another 5 shares here. So you can see my size is already smaller. And then I took gains at 87.18 when the move started to stall out. And we had this bearish hammer here on SPY. 1P bearish cross pending. So took gains on that position like that. My move was going to target the high of the day anyways, because I felt that the market was mildly bullish that kind of day. Wasn't a lot of upside. Could float higher a little bit, which is what I was expecting. But with market has a cap, stock has a cap, I'm not really willing to give this a whole ton of leeway over here. So that was Futu. So I think it was a pretty decent trade. I think I played that pretty well. And I think the main thing is I got the stock right and I got the market right. But when you get both those two things, you will do quite well. Next one I took was Cuervo as a day trade long. So big gap up, move higher. You can see the overlap in this move. Double top over here, pulled back to VWAP, found some support. I set a real relative strength alert, which got triggered pretty much right here, as well as a horizontal line alert for it to clear this little compression that it was in right here. So when it started to break out of this compression, decent little volume. I took a long at 82.40, 82.42, 20 shares. And then I added another 15 shares at 83.60. So my average was 83.50. We got a fresh buy signal. I didn't love how it compressed over here while the market was moving higher. You can see how I entered while it was lower, moved higher, and then it started to stall out near the high of the day. Didn't love that. I thought, all right, well, look, we can't get through the high. We're starting to pause here on this. So I'm like, all right, on the next little move up when it takes some gains. So it took some gains took some gains over here at 83. And then it took some remaining gains at 83.10 right here. And I actually missed a big pop up over here. This looks like a little bit of a buying climax here near the high, right at 83.50. So that was actually my original target near the high of the day. And then I stopped short just a tad here. So overall a good trade. Could have milked a little bit more out of this, but I'm not super mad. I think I played to the bias of SPY here, and I was, I didn't want to let it slip back too much. So I think overall I had a pretty good decision making over there. Pretty happy with that trade. I took Twillo short here. And this was an unusual trade, probably a no trade in the future, but we had, it was a very bullish chart, so I'm only trading this intraday. And I took a short when the market was not super bearish. So I took a short here at 12, which market has still another leg higher before coming back down. So I took a short pretty much right over here at 12, and the move was, all right, I might challenge this low of the day over here. And kind of setting a stop at this prior high above this level, close below VWAP. So we kind of stalled out, tested VWAP again. I think I was cool with that. And then it couldn't quite get lower. Then it actually broke through this relative high. So that's when I took the loss on Twillo. You can see how it bounced off that 8 EMA right here. So a lot of movement we realized. There's also a bullish trend. So kind of flagging out over here, and then ended up breaking through later in the day when sellers returned. I'd say overall, just should have been a no trade. Market tailwind wasn't quite there. There are some better shorts out there, and I think the better entry would have been somewhere in this candle had I to enter, right? A couple of candles ago, and be willing to scratch out of the trade when just wasn't right. So that is what it is. No trade for that one. Okay. I also took NVO. I took day trade short 10 shares at 78.50. So here's NVO. Good day trading setup. Big gap down, poking to the gap, and then selling off on pretty steady consecutive candles lower. So you can see that this is a pretty similar setup to what happened with what's it called? Oh, SIG, right? And maybe we could put up both those charts as a comparison. I feel like that could be a pretty valuable exercise. NVO is a choppy stock, gap down here, poked up, and then moved a little bit lower. Here's SIG. The main difference between these two is that SIG made a really big Mongo move earlier. So that my downside target was a little bit more limited. If I look at NVO, right, it did make a move lower, but this is not like, this is a Mongo move lower, right, where it makes a giant move back down and then pops back up. It is these gaps down, they're fairly common for the stock. It can gap and go a little bit here, gap down, go a little bit over here, right here, gap up a little bit of reversal, right, gap and go down, gap and go down, gap and go down, gap and go down. So that's not that unusual for this stock. So that's the setup on NVO, and then really the best entry should have been somewhere around here at 78.70 when it rejected this upward sloping trend line, breaking through the 8 EMA. That's a great entry point. You're near some resistance. Use that as a pivot. Entered on a break of the low of the day, which got my attention. Entered at 78.50. Churned down a little bit higher. Stock popped, and then it faded over here, and then it started to pop up higher. And then I liked it over here, and then we got this green candle, and I was like, yep, I don't like that. So I took a small win on the trade, as I had, I believe, yes, I'd added on this green bar smackdown. So I added some shares on this green bar smackdown, and then I scratched out, actually for a tiny win. So my average on the smackdown was 78.41. And then when we popped over here, I took a small small win at 78.36, because I knew that from SIG, okay, well, if this is going to start to stall out, there's a good chance it's going to pop back up pretty decently. So that's why I took the gains. It also had made a pretty big move, and I'm catching it late in the day. So it's not like I'm catching it in the first hour of the day or even first 90 minutes. That's when you have a big line share of the move over here. And I'm willing to ride those bumps because I'm joining in later. Don't have a lot of leeway. So also not a bad trade. I think that it was a good short. I think I played that well. I just noticed I'm catching a lot of these at the tail end of the move. So I need to really wait. Like, the better entries are when you can get them earlier in the day, but there's no sync up with the market here. Nothing really started to sync up until market started to stall out at around 1. And that is when I entered NVO. If you look at this candle, I entered at 1:30, right when the market started to move a little bit lower. So I timed it well with the market. I picked a good stock, and I managed to get out of danger. So I think you put all that aside, market right, got the stock right, had a decent plan, and I knew when to exit and get out of the trade. I think this is a good trade, even if it was a very small win. All right. Last trade I took was a lotto, which I usually don't do, but my rule for lottos is that they have to be extremely cheap. So I was looking for lottos, potentially on this bounce. I found this Wells Fargo lotto. I took the 77 call lotto for 9 cents right here, or I think I took it right here. Let me see when I took this trade at 3. Yeah, at the close of this candle. Moved down, pushed up. Hey, okay, I like that. Then stock sold off, and then on the sell off on the sell off at 3 cents. So I bought it, yes, at 3, 4, right over here. I think got it at 3 cents. So my average was 6 cents, and then I had a order out for 12 cents, so I could double on the trade, and then popped up over here, and I got my order filled on the 355 candle pretty immediately. So that was a nice win. I felt like I played the lotto decently, but, and here's a big but, I should have waited for that dip. If you looked at, I remember how Dave traded Marvel. He got in on this, pretty much this dip to support, right? And it had some relative strength. So on a dip, these got really, really cheap, and then you can get out earlier. So the hard thing is, like, you have to find a stock with momentum that is going to dip, so you get those options for super cheap. You also want to get at least some sort of market tailwind, but you need a stock. It's a kind of a tricky. I think Marvel is a good example to study. So I think Wells Fargo was it was a good trade, but my room for improvement was probably to wait for a pullback. And like, I could have gotten a couple of lottos for like 3 cents, and I could have taken like 400% on them. So I think that's probably what I should have done. But we live and we learn. So back, right? Out of my 15 day trades, so I'm going to recap here. On my swing trades, 3 for 3 or 2 for 2, depending on how you want to count I and OQ. On my day trades, I am 7 for 7 with maybe 2 scratches. Let's call it 6 for 6 out of 7 because I got a scratch on SPY and a scratch on SMTC. So overall, day trades they're costing me. They're costing me this year or this month so far. And if I'm looking at my day trades, I'm down about 115 bucks. And that's mostly from, if I look at my SPY day trades, or if I just look at my over here. All right, yep. So from just day trading SPY and RSP, that's cost me 90 bucks. So easy rule of thumb, losing money, get out of it. It's not worth it. Trade SPY on a trend reversal day. So I'll have a very specific pattern, and unless I get that, not going to take it. Now on my other stock day trades, there's a lot I felt like I could have avoided, and I think a lot of it's just not taking subpar trades. So I'm looking at all the trades I took this year, or took so far this week. So out of the 15 trades, let's see, 1, 2, 3, 4, 5, 6, 7. Yeah, so I think half of them I should have not taken. I think the only justifiable loss this week was AMAT and the first SPY trade. The first SPY trade was more understandable. So yeah, outside of that, I think I overtraded on the day trades. I think it cost me, and that is going to be the change I'm going to make this. Really, if I'm going to trade SPY, it's going to be on a gap reversal, either like on a 6th or a 7th kind of day. I'm actually already short SPY, and I'm going to end the video actually with what I'm swinging short, because that is going to be a little more interesting. So first is CAT. So took CAT swing short at 352.50-ish. And my stop was somewhere here, and I was willing to take heat in the market. You can see how CAT has made a roaring move higher. Not a fan of that. I think I missed this bottom of this channel here. This could be some low minus support coming into play. So don't like that on CAT. And what I'm really waiting for here is that I'm waiting for the market to roll over. I can actually take a full size loss on CAT if it goes up to 402 because I've sized it on a half size. So right over here at 372. Yeah, so I'm short basically 6 shares of CAT. So a $25 loss somewhere here. That's $150 or $25 move is a $150 loss here. $50 move, I can actually withstand that because that would just be a one normal win that I lose out on. So I actually technically, or size-wise, I can actually take that kind of heat. Now, I do not want to take that kind of heat, and I would like to see CAT start to roll over this week. Now, I don't know if I can win on this trade. I don't know if it's going to come back lower. The real win would be if I can get out somewhere at 372 or even close to the 50 SMA. Now, here's what I want to see in CAT. If SPY has a bearish trend day, I want to see if I want SPY to have a flat open or a gap up. I want CAT to have a gap down, non-stop selling, blowing through the 50, blowing through the 100, and getting all the way to this gap. I want to see a big bearish engulf on this move. Right, I want to see something like, I want to see a candle like that or a candle like this that really puts in the selling pressure. It may stall out for a couple of days, but right now I'm just looking to get the best possible loss on cat. So as soon as it gapped up over here and sold off, yeah, not a fan of this. And then when it got over here on a day when the market was selling, it was flat, sort of not really doing much. It was actually able to hold the gap an inch up higher. Yeah, I knew that if the market was, if I didn't expect the market to potentially roll over here, and it's not guaranteed, right? If the market's a loss on cat, but if the market does roll over, I know that I probably have a higher chance of taking a smaller loss on cat than taking the loss right here. And that's kind of the decision I made on the 16th. I said, all right, what's the chance that I gave myself maybe like a 25% chance of taking a bigger loss somewhere over here versus a 75% chance of taking a smaller loss somewhere over here. And I waited that out. There's even some chance I could maybe even break even if it really smacks down. So yeah, that's cat. I'm also short SPY around 590, 150, so kind of right around here. And my stop is going to be around 602 if a clean break of this high. And a gap, if a gap is okay as long as it sells off hard. If it doesn't sell off hard, then I got to get out of the trade. So I'm taking a little bit of heat in the SPY short, but also a half sized, and I'm expecting the market to roll over. So that's the only two open positions I have. Basically, two half-size shorts, one with me, one against me. Or I guess one kind of against me, one very against me. And I'm having my bullish picks and bearish picks kind of lined up for this week. So not a lot of different nice stocks. So I'm going to do the analysis probably after this video. But these are all the picks for this week. So I think the main recap here is that my swing trading so far is doing pretty well. And I might be a little bit early on cat and cat I took the heat on SPY a tad early, but overall I think my swing trading is in good shape. My day trading I'm keeping a small size, and I need to revamp that. I'm cutting out the vast majority of all my SPY trades in terms of day trading, and I need to kind of really get my entries on my day trades. If I look at some Futu or Futu, whatever you want to say it, where I really I got a strong move. I got that bounce off view up that I liked, right? This was like a no-brainer entry for me. Even something when I took like ISRG, where I'm joining the cycle at a favorable point. I'm so much more confident and profitable on this trade here versus something like a SIG where I am, this is a really big move. It's overextended, and I'm chasing at the low of the day. Just not as comfortable with those trades. And, there might be a way where it works out, but I just don't have that's not really the setup that I know how to trade well. Even comparing to something like RCL, where this is a setup I know how to trade, and I like this setup. So I kind of know what to do and know what to expect price action-wise and even time-wise. So just kind of reminding myself, what are the setups that I like? When do I need to enter them? And then just kind of going to be lightening up the day trading this week. We'll see if we are able to take some swing shorts or not. But that is the trading recap for this week. So thanks very much for watching. I know this was a longer video, but had quite a bit of trades to go over. So that is what it is. Thanks for watching, everyone. I will catch you all next week.